And we saw that starting in June in the crypto markets as the centralized finance part, the CeFi part of crypto, blew up as credit became less available, and you start seeing who's swimming naked when the tide goes out. And there was a whole bunch of people swimming naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda. And that was something where it appears from what we know that Alameda went bust in June, and out of that they tried to paper over the cracks with customer money to hide the issues, because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. Crypto is driven by two things: the technology, which is Metcalfe's law, the adoption of that technology and its uses, which is Metcalfe's law, to remind you, is the number of connections on the network, and the number of people on the network and the number of connections. So how much network activity is there amongst how many people? That's the technological driver that drives the exponential growth. In the middle, you have cycles. The cycles are driven by liquidity, same as all assets. And liquidity being drawn out as M2 shrinks, the Fed raise rates, other central bank raise rates, means that crypto falls. As liquidity flattens out and starts turning up, then crypto rises, as do other risk assets. So that's the basic cycle. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend, and that becomes an extremely interesting time to focus on accumulating crypto. What also happens at the bottom of liquidity cycles is things blow up. Less money around means those worst borrowers and people who have abused capital tend to blow up. I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend, whether it's the 2 standard deviations oversold in the log regression channel of Bitcoin, or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. The reason I got into crypto in the first place was because I went through the financial crisis and nobody knew who owned what in the banking system. So when Lehman went under, it was a big mess of trying to figure out who the hell owns what. Then in Europe, Cyprus, the banks went under, and in Spain we had some bank failures too. And what happened is, in Cyprus, they bailed in the depositors, which means you were just happily leaving your money on deposit in the Cyprus bank, and they take it and say, well, it's actually our money now, i.e. you don't own it. In Spain, they did something even ruder. Well, I don't know if it's even ruder, but more Machiavellian. They told savers, hey, listen, we can give you higher rates of savings on these things on this account. That account was preference shares, and then they defaulted on the preference shares as the banks went under. It was criminal, but they didn't get prosecuted for that. Custodying Bitcoin, Ethereum in your own ledger device or Trezor device is as low risk as you're going to get. Now, obviously, there's all the password elements and remembering your seed phrase, all of that, but it's then down to you. You are responsible for your own money. I like a world where we're responsible for our own money, like I'm responsible for my own car, my own house. Somebody else isn't responsible. Why should I do that with my crypto or my money? And so I think it's a really important thing. Now, of course, we all need to use exchanges. So what do we do? You do your trading on exchange, you buy and sell what you want, you take it off the exchange. That's it. And you can do the same with your NFTs. I'm a huge Ledger fan. Just store them there. If it's shrapnel and shit you don't care about and you want to trade out of it, sure, leave it in your MetaMask, leave it in wherever you want, but don't leave big balances. You don't need the risk. Crypto gives you the answer of not needing to take risk. I think the elements of transparency of blockchain are what blockchain is all about. And I think, yes, there'll be edge cases for people who want blockchain privacy. But I think the point being is if our enemy is the Web 2 world of concentrated data in concentrated hands and our money concentrated in a few people, transparency is actually a good thing. We want to see who's doing what. And I think more transparency is good. Now, it's not really nice because nobody wants us to post our bank statements online. So why do we need to do it with our crypto? So you can take ways of trying to conceal your holdings from everybody because nobody really wants that to be known, but you're transferring around the system and what you do. I think transparency is actually a good thing. I do not think the dollar bull market, structural bull market, is over. I think the dollar milkshake theory is alive and well. This tipping point where growth is starting to fall and inflation is coming off and the rate of change of rates comes down, the dollar tends to do badly. If we hit the eye of a recession, the dollar will do well. It always does. The dollar has a smile. When the world is going really well or really badly, the dollar does well. So in the middle, and we're going to that movement phase, the dollar does less well, which is why the dollar's been selling off. And that's normally a net positive for crypto, but obviously we've got a lot going on in the crypto market. The recession's coming. Surely you haven't priced it in. Tell me a living person who doesn't know there is probably a recession coming, and then say, oh my God, it can't be priced in. Everybody knows there is a recession coming. Sentiment is the most bearish in the history of equity markets. They know it's coming. They know, every single person. Well, earnings are going to be revised down. No shit, Sherlock. Everybody's telling you that, but it's probably in the price. A recession where the Fed don't cut rates even when the economy is negative 3%. Stuff like that. Are there other things that could cause it? Yes. Is there a systemic problem in the global markets like 2008? There is not. I do not see it anywhere. So I don't see that kind of double dip, extra prolonged recession. But again, I could be wrong, but I don't think so.